It's interesting that the Fed, at least Jay Powell, has finally admitted that inflation may not be as transitory as he thought. Within the data that you're looking at, what makes this less transitory than maybe we thought it was in the beginning?
Oh, it's clear. I mean, there's two things. There's the supply chain issues, which are proving a lot more persistent, I think, than any, who knew that global logistics was as fragile as it has turned out to be. And those will eventually go away, but not as quickly as, not nearly as quickly as we thought or hoped. And then there's the labor market, the great resignation. Employment is still well below the pre-pandemic trend, but everything else about the labor market says it's very tight. So it appears that the economy has less capacity than we thought. And so that's why we're in a situation where inflation, has not faded away quickly. I think it is important to say that if we look at both consumer and market expectations, everybody is expecting a lot of inflation this coming year. But 5-year inflation expectations, again, both consumer and market, are not up all that much, which suggests that both people who are making bets on it and people who are going to be making decisions still think that this thing is going to go away by next year. So, I guess we're not allowed to use the word transitory at this point. That's something. No, expectations are still not building in a 70s-style persistent inflation.
Okay, so we'll have to find a synonym for transitory that appeases everyone, Professor. But I am curious as to sort of what the Fed is fighting here when it comes to the idea of tightening monetary policy, because when you talk about some of the inflationary pressures out there, and I don't mean you, but I just mean we in the royal sense here, is there a sense that a lot of those pressures really weren't about an increase in economic activity, just a shift in economic activity into certain corners of our economy that just couldn't really withstand that weight?
Oh, yeah. I mean, none of it makes sense if you just look at the aggregate numbers. It's that huge shift. It's all the people who demand for durable goods soared while demand for services did not. People were afraid to do face-to-face stuff, so they bought appliances instead. And that shift to durable goods is a really big part of the story. If it was only, the labor market is also part of it, but if it was only tight labor markets, if it was only just sort of conventional aggregates, inflation would be more like 4 than like 7. So this is really about a skew, and presumably the skew is temporary, or we adjust to it. I mean, the cure for high prices is high prices. Eventually, the supply chain stuff will get unsnarled. But meanwhile, it has been quite a shock.
Has been a shock, and indeed, it's suddenly changed the tune quite significantly from the Federal Reserve. Tomorrow, many now worrying that we'll see a policy mistake. Many felt that the Federal Reserve was moving too slow. Some are now worrying that intentionally we could see it move too fast, slam on the brakes. How are you anticipating this very tough balancing act that the Fed has to get in terms of still not stifle growth, but really look at these price increases head on and the wage inflation they're in?
Yeah, they're looking at it as far as, as best I know, and don't have a lot of inside information, they're looking at it pretty much the same way. The Fed's version, which is also my version, is that it sure looks as if the economy has hit the speed limit. But that's a call for taking your foot off the gas pedal. It's not a call for slamming on the brakes. And so what they want to do, then, that's the balancing act. How do they sort of, get us to level off, to slow down a little bit without throwing us into a recession? No guarantee that they'll do that, but nobody is under any delusions here. There's nobody at the Fed is under any delusions. They're aware that that's the trade-off. They know that this is going to be kind of rough. I think they are. Certainly, I am looking much more at I'm actually waiting. The report I want to see is the employment cost index on Friday. I think that's going to be more. That's going to tell me more than the supply chain influenced inflation numbers.
From the political perspective as well, are negative real wages an issue?
Well, they are. I mean, clearly people would be a lot happier. But as I've been pointing out, you had falling real wages and a strong labor market in October 1984. And that didn't stop Ronald Reagan from having a landslide victory. So I think you need to look a lot beyond the straight economics to understand why people are so negative. Why, and there's a strong partisanship element. Republicans are telling the Michigan survey that this is a worse economy than June 1980, when we had 14% inflation. So, there are clearly political downsides, although I'm not sure, given the world we're in, that anything that happened under President Biden wouldn't be seen as a disaster by a large fraction of the American electorate.
Yeah, I mean, unfortunately, that's the state of politics these days. I am curious, Paul, about the feelings that people have about the economy, whether they're distorted or not by politics. We kind of know that sometimes the way people feel about things can actually feed through into real economic activity, either to the upside or to the downside.
Yeah, so far we're not seeing that. What's actually odd is that people say the economy is basically what the surveys tell us is that if you ask people, how are you doing? They say fine. If you ask, how is the economy doing? They say terrible. If you look at their actual spending behavior, they seem to be operating on the basis that I'm okay. My financial situation is okay. We're not seeing a massive pullback, nor are we seeing, as I kind of mentioned, any sign that people are marking up prices simply because they think everybody else is going to mark up prices. We're not getting self-sustaining inflation yet. So this is kind of a thing where when you ask people about the economy, the question they're answering may not be the one they're asking. You may ask, how's the economy? And they are actually answering, well, I think things are terrible because I don't like the people in charge.